Reconciling a bank statement simply means you are making certain what the bank believes you have in your checking account is the same as what you believe you have in your checking account. The process of reconciling bank statements to personal checking account records should be done monthly. Errors can easily occur, as human beings are the ones who are entering the checking account to deposit and withdraw monies manually or electronically. Anyone can make a mistake. If you reconcile your bank statement monthly, you ensure that any errors can be corrected promptly. This is a sample bank statement. Bank statements can take many forms, but most will have the account number, the beginning balance, the current balance, and all transactions that occurred in the account over the specified time period. This bank statement covers the month of October. Another way to retrieve checking account information is to access it via Internet banking or phone banking. This sample of Internet banking reflects the activity in the checking account over a time period specified by the account holder via a menu option. Reconciling bank statements is really quite easy once you get the hang of it. Many people personalize the process to meet their own needs. The first question that must be answered when reconciling the bank statement is, who doesn't know what? Look at the bank statement and ask yourself if the checkbook knows each transaction on the statement. Generally, the checkbook doesn't know about service fees, check printing charges, NSF fees, interest earned, or notes collected. NSF fees are non-sufficient fund fees, more commonly known as bounce checks. Service fees, NSF fees, and check printing charges reduce the balance in the checkbook, while interest earned and notes collected increase the balance in the checkbook. This process is called adjusting the checkbook balance. Next, you need to adjust the bank statement to the checkbook. Ask what the checkbook knows that the bank statement does not. The bank statement does not know about outstanding checks or deposits in transit. Outstanding checks are checks already written. The bank statement was printed before the checks cleared the account. Deposits in transit are those deposits that were made after the bank statement was printed. Outstanding checks reduce the balance on the bank statement, while deposits in transit increase the balance. Once you have adjusted both the checkbook and the bank statement, both account balances should be equal. Reconciling bank statements is really quite easy to do and should take only a few minutes each month. The process can be summarized in 3 easy steps. First, adjust the checkbook balance using the bank statement. Make sure that the checkbook knows everything that the bank statement knows. Second, adjust the bank statement balance with the checkbook. The bank statement needs to know everything the checkbook knows. Finally, compare the adjusted balances to make sure they are the same. In order to reconcile the bank statement, make certain you note all outstanding checks, checks that have been written and recorded in the checkbook but have not cleared the bank yet. Deposits in transit, deposits that have been made after the bank statement was printed. The checkbook knows about them, the bank statement does not. All bank charges such as service fees, NSF fees, check printing charges, etc., which the bank knows about but the checkbook does not. Finally, record all notes collected by the bank on the account's behalf as well as interest earned. These must be added to the checkbook balance. The process of reconciling a bank statement can be summarized in the following 2 slides. Basically, look over the bank statement and find any credits that have not been recorded in the checkbook and add these to the checkbook balance. Find any charges or debits not recorded in the checkbook and subtract them from the checkbook balance. Once you have looked over the bank statement, go to the checkbook and do the same process. Find any deposits in transit and add them to the bank statement balance. Then find all outstanding checks and subtract them from the bank statement balance. Here is an example to help illustrate the process. Greg Bourne went online to review his bank activity. He noticed that his bank balance was $925. His checkbook register showed a balance of $1,835. He had outstanding checks of $115, $26, and $94, a deposit in transit of $1,231, a note collected of $123, a check printing charge of $22, and a service fee of $15. Reconcile his bank balance with his checkbook balance. Begin by listing all the outstanding checks, total them, and record the total on the bank reconciliation form found on the next slide. Shown is one type of bank reconciliation form. This form has the checkbook balance on one side and the bank statement balance on the other. From the story problem, record the given checkbook balance and the given bank statement balance, then record the total of outstanding checks. Check for any deposits in transit. The story problem notes that there was a $1,231 deposit in transit, recorded on the bank reconciliation form. Next, look for any bank charges that the bank statement knows about, but the checkbook doesn't. Record the total charges. In the story problem, the bank statement knew about the check printing charge of $22 and the service fee of $15. Record the total of $37 that the checkbook doesn't know about. Look for any interest earned, notes collected, or other credits from the bank statement. Record the total of these transactions. In the story problem, there was a note collected of $123 that must be recorded. Subtotal each column and record the subtotals. Calculate the adjusted balances for both the checkbook and the bank statement. The adjusted balances should be the same. If they are not, something has been overlooked. Go back and review both the bank statement and the checkbook to determine what has been overlooked. Reconciling bank statements can save you money and time in the long run. Errors are frequently made by financial institutions. Be proactive with your financial well-being and recognize an error before it creates havoc.